hi everyone. Welcome. I think we've got a lot of people hopping on. It's great to see everyone's tiny faces popping up on my screen. For those of you who don't know me, I'm Beth Brown, the CEO of Community Foundation, Sonoma County, and I just want to thank you on a variety of levels this morning. I mean, first, thanks for being with us today and joining us in this format. I'm sure, like all of you, you're becoming quite accustomed to Zoom and noticing the limitations of it, but also appreciating that it's this platform where we can come together, lots of us on relatively short notice, and at least see each other faces. So thanks for joining us. But more importantly, thanks for all of the work you are doing in the community right now. I mean, I know it's not an overstatement to say that for all of us, this is the biggest challenge of our careers and for our country, probably, you know, potentially in our lifetime. So we're being called to service in a new and complex and challenging way, and we could not do it without your leadership in the nonprofits that you lead. So thank you so much. And as this crisis evolves, we'll be looking for a variety of ways that we can provide education and support. And today's seminar is one of those in terms of providing some education around the CARES Act, and hopefully can help answer some of your questions about your organization's eligibility for funds, for federal funds, and also how to go about and do it and swiftly. So this is the time is of the essence a project for all of us. So I'm just delighted that Debbie Warren, CPA with Ningali Accountancy, is joining us today. Debbie has over 20 years of experience as a CPA and is the chief operating officer of a boutique firm in Healdsburg. And so it's great that we have this expertise and her willingness to present today and to answer your questions as well. But before I turn it over to Debbie, I'm going to introduce my colleague, Caitlin Childs, our Director of Communications, and she's going to give us a little bit of ground rules in terms of our Zoom today. So Caitlin, I'll turn it over to you.
Hi all, so thank you for joining us. Considering that we have such a large group, we're gonna ask that you all keep yourselves muted today. And we know some of you are gonna have questions for Debbie, and we're encouraging you to use the chat feature. So that'll be at the bottom of your screen. There should be a button that says chat. If you click that, you can see the chat as it comes in or as it comes up. And right now we're seeing the screen sharing view. Debbie's going to walk us through a couple of slides. Now, I want to share with you just one tip on how to view this. I would encourage you to make your screen full screen. And then at the top, you should see a green box that says you are viewing Debbie's screen. And then there's a view options link. And when you click the view options link, there's one option that says side-by-side mode. That's my best recommendation for the viewing, depending on your screen size, but it should be your best way to view this webinar. So thank you so much.
Great, thank you. Welcome everybody. Just to give an overview and to continue, sorry if somebody driving crazy outside my office, and to give a roadmap of what we're going to go over today. We're going to talk about what the CARES Act provides specifically for nonprofits and discuss 3 really great resources that we all hope you run out and go get after today. The first one that we'll walk through is the Paycheck Protection Program, and that loan is based on payroll, and we'll walk through the terms, the application process, the differences for nonprofits in that application process, and applicable expenses. And it also includes a forgivable aspect to it that we'll talk about because it's, you know, we've never seen anything like it before, where you can get a significant amount of money and perhaps never have to pay any of it back. The second piece will be what people call the EIDL loan, and that is the Economic Injury Disaster Loan. It's been around for quite some time, and it gets brought up whenever we have a disaster, which COVID-19 has brought up. So it has the third component as well that we'll talk about, that has a $10,000 cash advance grant that could be possible for everybody. So we'll go through that and then answer some questions at the end if you guys have more questions. And so let's get started. So the first one I mentioned is the Paycheck Protection Program. And the SBA has, the loan is through the SBA, but this one you particularly have to go through your existing banking relationship. So you would want to find out if your current bank is an SBA lender. A lot of them are locally, and if you happen to go to your bank and they say, no, I'm not an SBA lender, you can always go to the SBA's website at sba.gov and find an SBA lender. Locally, though, in Healdsburg, there's B of A, Exchange Bank, Bank of the West, Wells Fargo, that are all listed on the SBA website. And there's even more that I know of. Redwood Credit Union is one that's not listed on there. Summit State Bank is another that's not listed on there. So there's a lot of local resources. And this Paycheck Protection Program is the one that is, the loan amount is based on your payroll. So if you do not have payroll, you do not qualify for this loan program. And the SBA opened it up to nonprofits, which is fantastic. That's what we're all excited about. The SBA loan the SBA loan can be up to 10 million. And I want to go over the application process because there's a few nuances that are different for nonprofits in here. And just on this slide, just so you guys know, the application period says it's open until June 30th, but it's first come, first serve. And right now they've allocated $350 billion. And that sounds like a lot of money, but there is so much interest that there are applications in the pipeline right now that are probably to the tune, if not in excess of that. But don't let that discourage you, because very, very few have been funded to this point. And we even have, excuse me, banking relationships with some large banks down in San Francisco, and they have told us that they are prioritizing nonprofits. So even if you get your application in today, you still have a huge likelihood of getting funding very quickly. And banks are really trying to help nonprofits, because nonprofits are such a huge community impact that they really want to get that money out to them and be helpful to them. So let's go over the application really quick, and I'll share with you the differences that you guys are going to want to note for the nonprofit that are different than small business. So up in here for nonprofit, you'll obviously mark your nonprofit, and you'll enter the business, legal name, all of that. Here in your primary contact, this is where you want to have anybody of a leadership position. So your executive director, your CEO, or your board chair could be listed here. And just know that there's no personal guarantee to this loan. That it's 100% government backed, so you don't have to feel like, oh my gosh, if I'm signing this loan, does that mean I'm guaranteeing it? You're not. But there are a few personal questions that I'll scroll down and show you in just a second that you will have to answer as a primary contact. So primary contact, someone in leadership position. Average monthly payroll will come from a worksheet that we will go over in just a minute that you'll have to provide. It's based on your 2019 payroll. So I'll give you the cell that will come in. We've provided an example that you can use. You're happy to use your own, but the template that we have will make it really easy. So all three of these boxes will come from that support that you have to provide. And then the purpose of the loan, you would just mark in here what it's for. Most people mark all of this because it's usually covering all of it. Another difference for nonprofits is here in the owner section. Rather than listing any owner over 20%, you would write in here, none 501c3 charity, and leave this as, you know, the rest empty, and the bank will be totally fine with it. That's what they expect from nonprofits. So questions 1 through 4, here you answer on behalf of your organization, and then questions 5 and 6, you answer on behalf of who you put as the primary contact on your application. And then 7 and 8 are self-explanatory. 7 is just making sure that all of your payroll is within the United States. 8 is if you're a franchise, so that would be no. So those are the nuances with the nonprofit side of that application. Let me switch back. There we go. Okay, can you guys see my screen again? Let's see. Sorry about that. Okay, now we're back. So the terms being offered in this Paycheck Protection Program is, as I mentioned, there's no personal guarantee. The government is backing this 100%. There's no collateral required, no fees. You know, you have deferred payments, so they don't start right away. And as I mentioned, there's $350 billion allocated currently, and they are saying that once funding starts rolling out, a lot of people have expressed frustration over the slowness of this. So again, as Beth mentioned, now time is of the essence to really get your application in as soon as possible, because it's been almost a week since people have been waiting, and that funding's really going to start rolling out. So get it in there. Interest rate is at 1%. So that's unheard of low. Even if you don't have it all forgiven, it could be a really great bridge option for you in the meantime. And there's no prepayment penalty. So if you get it, you have deferred payments for 6 months, and you end up not getting all of it forgiven, after 6 months, you can just, you know, pay whatever the unforgivable part is back, and there's no penalty. So there are some certifications that are in that application process that is causing some confusion. So I wanted to go over some of them. The primary contact who is going to fill out that application is going to have to initial all of these authorizations. So the top one is the one that's causing the biggest confusion. And it says the application was in operation on February 15, 2020 and had employees for whom it paid salaries and payroll taxes or paid independent contractors as reported on Form 1099 miscellaneous. So this is driving people to say, well, then can we include what we pay as 1099 miscellaneous payments to independent contractors on our payroll calculation that determines a loan amount? No, you cannot. It is solely based on W-2 wage earners. So even though this question is in here and it asks you and it includes this here, it does not include on the other calculation that we'll do later. The other ones, that one's self-explanatory. It's also asking you to certify that funds will be used to make your payroll, mortgage interest payments, lease payments, and utility payments. So just know that truly you do have to use the funds for that. There is a back-end 8-week look-back period once you get funding, and you want to be sure to use those funds there. There was one other one here for this certification, that I understand the loan forgiveness will be provided for the sum of the documented payroll cost, covered mortgage, and covered utilities, and not more than 25% of the forgiven amount may be for non-payroll costs. So we'll discuss that on the forgiveness part on the back end as well. But to answer a lot of people when they ask, what do you mean by that? Or what do they mean by that? The forgivable calculation, this program is really encouraged for you, if you've laid off or furloughed your employees, to hire them back, to get the workforce back out there working. So the forgivable part will do 85% of it would need to be for payroll, and then up to 25% could be for your mortgage, your lease, your rent, stuff like that. So that's what that one's certified. And the rest are self-explanatory. So this, on the application where it talks about how to calculate your payroll costs, I'm going to switch over to the Excel file, but just to give an overview, the loan amount is based on a maximum of 2.5 times your average monthly payroll costs that were in 2019. And I would recommend everybody go for the max. I mean, they're not going to look and go, oh, we'd rather fund you 10,000 versus 120,000. And if you think I only need 10,000, that's all I'll get. I would not recommend that. I would go for the max. And let me show you how to do the calculation. Okay, there we go. And so we created this easy to use spreadsheet. And again, it's based on all of your 2019 payroll. So even if an employee only worked for you a month, you would list them on here. Anybody that received a W-2 from you in 2019 is who you will list on this worksheet. So you can expand in rows or whatever you need. You would put their employee name in here. A 1 goes for everybody that you list on here. And the SBA on this part of the application process counts everybody as a 1. On the back end side, when they do the forgiveness calculation, there will be more guidance coming out on how to calculate a full-time equivalent employee. But for now, just put 1 in here. And then the guidance is very confusing when it talks about salaries included, sick and vacation and all this except for this sick pay. So just to keep it simple, go to your W-2s that you filed for everybody, go to box 5 on everybody's individual W-2, drop that amount in here, and those are the gross wages that are eligible for the payroll calculation. Also on that W-2 form, since you're required to report employer paid insurance premiums for everybody, look for W-2 code DD. It'll be on there on your W-2 form by each individual. Drop that number in here. The employer retirement contributions, this is not what your employees contribute, but you as an employer may have a matching contribution that you give. And that amount would go in here, and it's based on by employee. So you could either grab that from your 401k upload reports or your payroll reports inside your system. Everybody's systems are very different. And if you have questions on the back end, again, I can answer some of these nuances that people may have. And your state and local taxes are also an includable expense that can be put on here. For some reason, they excluded federal taxes, but state, meaning your California state unemployment that you pay as an employer. So again, no state withholding that you do for employees. That's a discretionary withholding, and that's not included. This is an actual expense cost of the employer. So state unemployment, and then a lot of companies have an employment training tax on top of that. So that would be an included cost as well. And then you will put that in by person. Most times in your system, these costs are down at the bottom of your payroll summaries, shown as an employer cost on a annual report that you can pull from your system. And then this is already formulated in the worksheet that we provided, so it'll add up all these costs. One of the exclusions is anybody with wages in excess of $100,000. So it's not all the costs on top of that, just the wages. So this column is formulated as well, and it will automatically deduct anything over $100,000 from this column. And then this column, most people can just completely ignore. It's only if you had payroll outside of the United States. So if you happen to have that, enter it here for that person and it would deduct it. So what this will do is this worksheet will calculate, as you can see in the cells, what it takes, adding the total payroll costs, taking what's excluded out, and here is the total for your average total monthly payroll cost that will feed into your application in that first box. The second box over for the maximum loan amount, the 2.5 times, comes from this cell right here, the maximum loan amount, and it's already formulated in here. And then the number of jobs, that third column on the right in the application, would come from right here. And so I'm going to pop back out of here and go back over here and just recap again a little bit with the excluded payroll costs to answer some questions that have come up. Again, include everybody on there, even if their salary is over 100,000, and even if the amount is over 100,000 in box 5, don't limit it to 100,000. Just put the full amount in there. That worksheet will back out anything over 100. And then again, all the costs that are on top of that 100,000 are allowed. So it's only the wages that are excluded. And then again, no federal payroll taxes can be included, no income taxes that you pull from people's paychecks that they take out for federal and state at an individual level, those cannot be included. And we talked about, you know, being outside of the US. They want to make sure it's for payroll within our country. And this is interesting that they put this on the guidance, because the qualified, and I'll answer it because first, Families First Coronavirus Response Act came out first. And that's what provided employers an available credit for paying their employees sick pay under this act. And the so this will matter on the back end again when you go to figure out how much is forgivable or what loans you're getting, because in an overall higher level picture, you cannot use funds from either of these programs for the same purpose. So if you have payroll big enough that you could use both funds and not exceed that amount, it's fine, but they want to make sure that under this First Families Act that you may be filing a credit for in your 941s next quarter, and you get this payroll protection program, you cannot double dip in both buckets, is what they're saying. So for the healthcare benefits, the payroll costs we went over in great detail already. So for the healthcare benefits, it is for group healthcare coverage plans and insurance premiums. That's what you'll include on there. And when they talk about the mortgage coverage for when you're using funds for that, it's solely interest on your mortgage. This does not include principal or prepayments. And all of these items that are listed on here have to have been in effect before, as of February 15th, 2020. So just know that you couldn't have signed a brand new leasing agreement March 15th and, you know, gonna include that. It has to be in place since February 15th. So there is a lot of support needed for the applications, and every bank varies a little bit differently, but 99% of it is the same. And what is on this list is what you can plan on for what you're going to have to provide. So again, the application that has to be there has to be signed, and a copy of the driver's license will be for the primary contact, the person in the leadership position that signed for the nonprofit. So you'll provide your driver's license, and the payroll information, basically everything that you put on that Excel worksheet for W-2s, healthcare costs, and the employer paid 401k contributions, you just have to provide support for all of that. So if you have healthcare premiums, they're going to want proof of payment, invoice copies of those from 2019. When you upload your 401k contributions or contribute them on behalf of your employees, they're going to want those copies, and then all the standard payroll copies that you'll have from either your payroll provider, or if you do them in-house and you file them yourself, it's everything that you would have filed with the government at year end. And of course, they need your account number, where to send your money. But again, you know, stuff to not worry about. This is not based on the primary contact's personal credit score. It's, it's the government is backing this particular loan. So really get your application in, and I'll talk about this forgiveness side, and it becomes even more appealing. So once you get your loan funded, the part of this that has made it so popular is that the 8-week period beginning on the date of when you get it funded, as long as the money is spent on eligible costs, up to the whole entire loan amount could be forgiven. So if you want to do a rough calculation, that would be a quick one to see, oh my gosh, how much of mine would be forgiven. You can look at what your average monthly payroll cost was in 2019, compare that to what it's going to be as soon as you get funded, and based on the max loan amount that you're going to get, you can see if your continual 8 weeks payroll, if you project that out for 8 weeks, will be at least 80% of that amount of your loan. Then most likely all of it will be forgiven. So again, they're really trying to encourage people to keep their employees or to bring them back that have let them go. So you'll see the stipulations on this slide that you can check out later, that talks about over here on the right, where a lot of people have been worried and say, I furloughed all my staff, what now? Well, you still have time to bring them back and still qualify for this loan forgiveness. So they want to make sure that you're keeping the same number of employees and the same salaries that you were paying before. So you're allowed some reduction, but they don't want to see it greater than 25%. Otherwise, they will reduce your loan forgiveness on the back end. So again, the information is all in here. If you run the numbers and then go back to the slide, you'll be able to walk through and calculate if you would be potentially having all this entire loan forgiven. And another question that has come up from a lot of people is, will there be any tax impact on the forgiveness portion? And from the federal side, no, there will not be. There is still guidance to come out by state. I would assume that we will not see it taxable by state, but I can't say that 100% for sure yet because the final guidance has not come out on that. And the other thing that people have asked on this loan is, when will I get funding? It could be same day that your application is approved, but they have up to 10 days to fund it. So, but it still is super fast. Let me see.
Debbie, before you move on, we do have a few key questions that have come up from that part of the presentation. So I'm going to turn it over to Rob Morgan, and he is going to ask the questions for PPP.
Great.
Can everyone hear me and see me? One question that has risen is that a bank told the organization to use an officer as the owner and to list ownership as 0%?
You can do either. So when the guidance came out and it said you can either put that but I would suggest still putting a nonprofit in there. I mean, they should see the box up top marked nonprofit and then no. I mean, they're very good at what they do on the banking side. They're seeing thousands and thousands of applications. But you don't feel like you need to. You can either put someone there and put 0 and put nonprofit in there, or just put nonprofit and leave it at that.
Another question that has come up is that most of the local banks have closed their application process after the first 2 or 3 days. Or if your local bank has closed the applications, is it better to wait for them to open, or is there an alternative process that organizations can follow?
Yeah, that is a very good question. And that is where so much of the frustration has come around, because a lot of banks, because of, this is why we talked to the people down in the city, because we wanted to get a banking perspective of what was going on, because we couldn't figure out why the backlog or why they were saying only existing customers they would help. So on the banking side, they have so much confusion around this with their underwriters, fighting with their regulatory departments, they said, because they look at it like a grant, because so much of this will be forgiven, so it shouldn't even be a loan. But the regulators are telling the banks, you have to keep your liquidity requirements. And so some banks are struggling with being compliant and staying within those liquidity requirements. If they were to issue a whole bunch of loans out there, they would be in violation. So that's why they're trying to take care of their existing customers. And with that said, if you bank with someone who has said, we're not taking any more applications, I would certainly call your banking rep and say, look, I'm a nonprofit. Will you prioritize me and get me in there? And if they still say no, I would reach out to another local bank that is an SBA lender that will help you. Rather than waiting, I would certainly suggest going elsewhere. And if you still run into that roadblock of so many lenders around the area still saying no, then definitely go back to your bank and say, yes, put me on the waiting list, because they do talk about allocating more funds to this program, but I would still try to get to someone who would get my application in sooner than later.
Debbie, really quickly, another question that you may have answered. Do independent contractors qualify as employees?
No. So independent contractors can apply for this loan, but what you pay an independent contractor as an employer yourself does not qualify on the expenses that count towards figuring your monthly average payroll and your loan amount.
There are a couple of more questions that are coming in. If you offer medical benefits now, but you didn't offer them previously in 2019, is there any aspect, so they started offering these benefits in 2020, what part of those benefits are forgivable in terms of the calculation?
All of it. That would be included on the forgivable end of your payroll costs. So yes, that would benefit you on the back end. It wouldn't go into your calculation, obviously, for the loan amount, but it would be includable in the costs on the back end for the forgiveness portion.
And I guess the last question for the moment is, does cash in lieu count toward medical benefit reimbursement, or just as a payroll expense, cash in lieu of benefits?
Okay, in California, you're actually not allowed to reimburse people for their health insurance. So it should, if you are doing that from a payroll perspective, you should actually have increased their salary to compensate that, but it should be as taxable wages, because according to the payroll laws, you're not allowed to give someone reimbursement for medical premiums. So yes, it would be included in the sense that you should include it as taxable wages.
So questions are coming in, Debbie. Sorry to, are there any questions, are there any options available for organizations that have independent contractors solely and no employees as far as payroll protection?
Not on this program, no. The next one we dive into, yes, but not on this one, not on the Paycheck Protection Program. This is really centered around trying to boost the economy by keeping people employed and getting their jobs back as quickly as possible. So it really all is centered around payroll.
Thank you. And we will come back to the questions later. But thank you.
Yeah, you bet. So another program, and this one has two pieces to it. This is called the EIDL loan, the Economic Injury Disaster Loan. And this, again, is a federal disaster loan, and it's a little bit different in the sense that there is no forgiveness piece, but it has a really nice available $10,000 cash advance grant that can be used for anything and not have to be paid back. I mean, I shouldn't say anything. It can be used for payroll, increased costs due to supply chain. You can see it here on the slide, mortgage, lease payments, all that. But the neat thing about it is that you apply directly through the SBA. You do not go through your banker for this one. And the links are here on the slide to where you can go and complete the application. But the $10,000 piece to it, the grant that's available, it's submitted upon the successful completion of your application. So even if you were denied for this EIDL loan, you could still be entitled to get that $10,000 grant up front that would never have to be paid back. So this loan, you do not have to be you do not have to have employees, but what has come out recently from what we've seen, and again, there's so much that changes on all of this every day with the guidance that keeps being released because of the frustration surrounding the slowness that has happened with all of this. But the initial reports said that if the fewer number of employees you have, the less likely you would be to get the $10,000. They may reduce it and give you a smaller amount based on the number of employees. But again, that is only what I've heard in the community. I've not seen that firsthand. So I would still encourage everybody to apply for this. You know, because again, it could be $10,000 of free dollars. And this one is a little bit different. It's not based on your payroll. It is you applying for, you know, being substantially injured through this COVID-19 pandemic. And, but the interest rates, again, are incredibly low. They even made it lower for nonprofits compared to small businesses. Again, encouraging, it shows the, you know, the focus of really trying to help nonprofits out there. So, you know, it's a good bridge loan if you need it. And if you don't have the payroll to qualify for the other one, this is still a really beneficial program that will help a lot of people through these really tough times. The SBA used to always make it a requirement that you had to try to find credit elsewhere, but they've waived all that. The other main difference with this one is that there's no personal guarantees on loans below $200,000, but if you do go above that with this one, they will ask for a personal guarantee. So there are a few nuances with this one that are a little bit more personalized, and they will base it on credit scores, stuff like that. But again, if you feel like, oh, there's no way I can qualify for this or what have you, still apply. Submit your application, ask for that $10,000. It's free money, you know, and try to get it. A big question that we see for people asking is, can you apply for both loan programs? And yes, you may. There's no limit to getting both. And it's actually encouraged to apply for both for the free portions of the money. However, you cannot use the EIDL loan for the same purposes as the PPP loan. So, for example, you can't use them for the same payroll costs. But a lot of expenses are covered, so a lot of people have costs that will exceed that, and you'll be able to allocate a portion of your loan amount for certain things, and just make sure that you allocate more for payroll under the PPP loan, because that is the forgivable portion over there. Another thing too is that you may refinance an EIDL loan with a PPP loan. And the reason why people would do that is because the PPP loan, again, is at 1%, and any advance received under the grant would be subtracted. And again, the amount forgiven under the PPP loan would never have to be paid back. I think those are all of my notes I wanted to cover. Oh, another question that we get all the time is companies that use PEOs. So you can totally apply for the PPP loan if you use the PEO, and just know that, of course, you don't have 941s available through them, but they have other payroll reports that are supported by lenders and everything else. So they would definitely accept you as well if you use a PEO for your employees. And the other thing that I wanted to mention too, it was on the slide back for the payroll costs, is seasonal employers. Seasonal employers, if people ramp up business for a small period or are only in business for a small period, there are different time frames that you can take your payroll calculations from. And again, it's in this deck, so you can go back and see how to calculate for seasonal employees. And that's it. So we can open it up for questions.
So we do have a few questions in the queue right now. One is, how long does it take generally to receive the $10,000 forgivable funding?
Yeah, that's a good question. Originally, they had said you can have it in 3 days, and nobody's getting it in 3 days. Kind of like the PPP loans. You know, everybody was supposed to get same-day funding, and it was going to be this great thing. And it opened up last week, and nobody's. As of yesterday morning, I had not known anybody to get any of the PPP funding. And then by yesterday afternoon, there's actually 2 local people that I do know that finally got their funding. And one was through Robo Credit Union. I'm not sure the other bank, the other person got their PPP loan through, but they received approval and funding that same day. So that was impressive. And then on the $10,000 side, I have not known anybody to get that funding yet, but again, everybody in the community is saying it is coming this week. So that's why we really wanted to get this information out to everybody, because time is of the essence, and we really want people to get in that queue to get these available funds, because they haven't run out yet. This is actually a great time to get in there, because they're still figuring out on the lending and the banking side how to navigate through all of this, and they're almost to that point. So the money's going to start flowing, and we hope to see it this week. So to answer the question, 3 days was the targeted funding period for that 10 grand. So I'm hoping they get back to that once they can figure out how to start releasing the funds from the SBA side.
Great, thank you. We have another question, which is, we're unclear if we paid someone for their 2 weeks out for COVID-19 sick time, is that a separate program for the reimbursement of costs?
Yes, so that is under the Family First program. And Families First came out, that was the first one. And then the CARES Act was the second one. So under the Family First program, you are allowed as an employer to pay your employees up to 80 hours or 10 days. So some people that work part-time may only work 6 hours a day, and it would be based on their standard schedule. So they would be eligible up for 60 hours, not 80. But it's 10 days or 80 hours. And how that works as an employer is you have to track that separately. And most people just, you know, have a sick payroll item that they can set up in their payroll system. And when you go to file your quarterly, you'll be able to request a credit for those wages that were paid under that Families First Act. And what has come up recently with our clients is they have asked us, do I even have to pay in my payroll taxes now, knowing that I'm going to get that credit for the payroll sick pay that I've paid my employees? And the answer is no, up to that amount. I have further guidance on that if people need it, I can email them the information. I can send it to you guys and we can get it out to the participants in the meeting today. But that amount that you're getting as a credit on your quarterlies down the road is the amount that they say that you cannot include in your wages because you're essentially not paying it. It nets to zero when you get the credit from the Families First Act. So they're completely separate. Did that make sense? Did that answer it?
Yes, to me.
Okay.
But we do have another question, several more questions that are sort of nuanced, but what happens if the organization gets the loan, uses it appropriately, but then has to lay off the employees because they're still not back to normal?
You know, that's been a common question in the community, and the guidance is not out there yet on how far out you have to keep them. So everybody knows that they look for the 8-week period from the day your loan gets funded. So in that 8-week period is where they're going to compare full-time equivalents to what you had in 19 and salary amounts to what you had in 19. And that's what they don't want to see below a 25% decrease. So, you know, if you happen to go below that 25% decrease, it happens. You know, there's a lot of people that aren't going to be able to go back up even to 75% of what they were. So I would suggest going back to that slide, and you'll see here. I can go because I'm still sharing my screen. In here at the bottom shows the reduction based on if you happen to go below or above that 25% reduction. So if you happen to go below 75% of your operations, then you would take your total payroll cost, multiply it by the average number of full-time equivalents for the 8-week period that you started. So you could even say, okay, I'm going to have 100,000 in payroll costs. I have 8 people that I have now, but I had 12 people before in 2019. So you would take the 100,000, multiply it by 8, divide it by 12, and that would give you the amount that would reduce your forgiveness amount because you went into a greater reduction of 25%.
I guess the next question is the time threshold for notification once they've submitted the application. You said 3 days as far as funding, but if someone has submitted an application, how long should they wait or expect to have heard a response?
Mm-hmm.
Status of it.
Good question. So we were all expecting a response within days when they opened it up last week. And again, everything has been on hold. So what we've seen now with the funding starting, I would expect you to now hear within days of when you submit your application to the bank. They're really going to start moving these quickly. So it is going to be in the very near future that anybody should hear on either of these, the EIDL loan or the PPP loan.
And thank you all for sharing the questions and Debbie for answering them. We have that someone is unclear. They paid someone for their 2 weeks out. Is that a separate program for reimbursement? Or in terms of individual employees and figuring out their payroll costs currently, but looking back, how should they navigate that?
Yes, so in looking back, just go to that, see on the slide where you have option 1, 2, or 3. So 3 is for seasonal employers, but 1 and 2 are, option 1 is for people that were in business in 2019. It would probably be the best one for them to use. Option 2, because the SBA loan waived the requirement that you had to be in business for at least a year, gives option 2 for newer employers. So you would, the average number of full-time equivalent employees that you would take for the calculation would be on the day of funding for the next 8 weeks. That's the period that they're going to look at. And then when you go back and divide it by what you had in 2019, your option 1 and 2 are listed there on that slide for those timeframes.
Great. We have another question. Should organizations continue paying employees who are voluntarily not coming to work in order to qualify for the loan?
That is a case-by-case basis. The concepts behind those, so that's a big question. If you can afford to pay your employees, that is fantastic. That's great for the community. That's great for the economy. If you cannot, you know, there's the Families First Act that provides you up to 80 hours or 10 days of a credit. The other option is to pay them that, knowing that you'll get that credit from the Families First Act. And once they reach that point, there are many options. You could furlough them. You know, I would not recommend keeping people on if you cannot afford it, thinking that you would lose any funding for this program in the meantime. That's not the case. So if you have to furlough them and then you go through this application process, you get your funding, that's when you can bring them back. So don't feel like you have to keep them on in order to qualify for any of these programs. The one that, you know, is so unclear with the guidance is that $10,000 grant on the front of the EIDL loan. You know, when it came out, they did not say that it was based on employees. And then we've heard that they may consider the amount of the 10 grand grant that they'll give based on the number of employees you have if you have fewer than 10. If you're really that small, they may look at you closer. So with that said, it's hard for me to answer that with certainty. You know, if you didn't have any other employees and you let everybody go, could you potentially lose that 10 grand grant? Yes, that would be the only one outplayer that may impact your decision.
So we're going to go ahead and wrap up, and thank you so much, Debbie. Thank you, Rob, for moderating the questions, and thank you to everybody for participating, for your excellent questions, for providing resources for each other on the Zoom chat. For those of you who don't know, I'm Karen Demarest. I'm Vice President for Community Impact at the Community Foundation, and it's just been a real honor to be able to bring Debbie in and hopefully provide you with some really vital information to move forward. These are complicated times, and we really, really want to try to make it easier for all of you to help really sustain the fabric of our nonprofit community through these challenging times. So we will continue to reach out to you to keep you informed. I know I've seen lots of folks who are here today have joined our virtual coffees in the last couple of weeks. That's been fantastic. We're going to continue to do that. You probably got here by reading our newsletter, but we definitely encourage you to continue to look at our newsletters. This is the way we're going to be communicating with you. We hope to continue to bring you resources like this. Caitlin will be following up with an email to you that will provide links to Debbie's fantastic presentation. And if there were questions that we didn't answer, I think there were a couple of questions in there. We'll just provide a brief summary for those questions. And we want to hear from you. So if you have other ideas about resources that you would like us to bring to you, or ideas by which we could help you collaborate and partner, which we're hearing a lot of desire around that, just send us an email, keep us informed, and let's really work together to support each other, to care about each other, and to get through these challenging times together. So thank you so much. And again, Debbie, resources is absolutely vital for us to share, and we're really grateful for you taking the time. So thanks, everyone. We'll see you soon.